Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is the Kickstart video for June 12th, 2024, where I take a look at three major currency pairs from a technical perspective: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. Of course, we can add fundamentally that we have the CPI data come out weaker than expectations at 0.2% for the core measure, 0.0% for the headline measure, a corresponding decline in the year-on-year levels as well. That has yields moving lower, with the 2-year down minus 13.3 basis points and the 10-year down minus 10.3 basis points currently at the moment. Stocks are higher, with the S&P up 47 points. The S&P and NASDAQ closed at record levels yesterday, and they're likely to close at another record level today. Of course, we have the FOMC rate decision later on this afternoon, which will be of interest as well. But the Fed is now pricing in 2 rate cuts, so the dot plot probably reflects that. There was probably a debate whether 1 or 2, with a mixed picture probably being projected through the dot plot. Maybe now it's more toward 2 cuts. That all that is ahead still, but the US dollar is lower. And let's take a look at that US dollar from a technical perspective in these 3 major currency pairs. We'll start with the euro versus US dollar. On the hourly chart of the euro versus US dollar, we're down here near the 1.0765-ish type area before the release. And as you can see, the market's shot to the upside. In the process, we extended above the 200-day moving average. We extended above the 100-hour moving average. We extended above the 100-day moving average. We extended above the 50% midpoint of the move down from our most recent high to our low price that we saw in trading yesterday. And we moved up closer to the 200-hour moving average at 1.08323. We're currently trading at 1.0823. So there seems to be some reluctance to head above that level. I also have a couple levels through here that are of interest. In particular, if we take a look at this low right here and then broke below it here, and then we found support against it here on the move back to the upside, and then found support against it here before moving higher, and traded above and below it here on Friday before moving to the downside. So this area right here is also being tested right here. But really, if we get above the 200-hour moving average, I think that opens the door for further upside momentum in the euro versus US dollar. But right now, there is some profit taking going against that level. Traders are leaning against a level with a stop likely above that level as they take their quick profits off the CPI data. On the downside, if the 50% retracement does hold at 1.08164, that would probably be the best case scenario for from a technical perspective for this currency pair. Stay above that level would give the buyers the confidence to push to the upside. But I wouldn't be surprised if we do see some rotation down closer to the 100-day moving average here, just because the traders are leaning and there's some uncertainty from the Fed perhaps. But overall, we now have 2 CPI data that came in weaker than expectations, and that will have markets encouraged that the Fed's restrictive policy stance has some room for some cuts between now and the end of the year. So the upside may be the preferred measure, especially now that the ECB is out of the way with their cut and seems to be reluctant to cut further without seeing more data. So advantage, US dollar weakness. Let's take a look at the dollar versus yen next, and we'll focus on the hourly chart here. And of interest on the top side at least is how this area up here between 157.38 and 157.46 did a pretty decent job of again holding resistance. That level was defined back here where the price extended to the extreme, and then use this area as a resistance area, more or less between those 2 levels in trading. Yesterday, the price highs came up to that level on 2 separate occasions and found willing sellers against that level in trading here. Today, the market moved back up toward those levels, found willing sellers. Of course, the data sent the price sharply to the downside. There, it was a fait accompli after the data to push lower. In the process, we fell below the 100-hour moving average, 200-hour moving average. A 200-hour moving average will now be close resistance out for this pair. Stay below the 156.43 level, keeps the bears firmly in control. More conservative risk might be the 100-hour moving average of 156.68. On the downside, however, we are stalling against 50% of the last move to the upside here. That 50% comes in at 155.96, just below the 156 level. As you can see, we're currently trading at 156.05. Get below the 50% retracement level would be another target reached and breached, and that would have the traders looking toward the 61.8% retracement and maybe these lows before heading down to our low price that we saw in trading, I guess, just last week, all the way down at 154.53. So the sellers are more in control, and the dollar versus yen stay below the 200-hour moving average is the is one of the close risk levels. Maybe even traders might look toward the 38.2% retracement if they want to be a little bit more aggressive in their selling on dollar selling trend today. Finally, let's take a look at the sterling versus US dollar to put it on the 4-hour chart. Why? Because we broke above the highs that we saw in trading last week. And we also moved above this swing area going back in time. We had a swing high right here coming in at 128.27. Back here in the month of March, the price broke above that level on its way to the 128.93 high. We came back down toward that area right here, and then used this level as a resistance level through here. So this is where this swing area was developed right here after the extreme failed up here. And in trading last week on the 4-hour chart, we came up to that toward the low of the area and found willing sellers not once but twice. And trading here today, we've moved above that swing area and also above the highs from last week at 128.19. So the 128.19, the 128.27 is now support. That's the risk level for buyers looking for more upside here in the sterling versus US dollar, and the buyers are certainly in control. On the top side, we have the high price from the month of March at 128.93 as the next key target on the top side to get to and through. If we get above that level, it opens the door for further upside. Now let's take a quick look at the daily chart, because we are breaking above a key level off the daily chart that goes back to way back here in 2023, where we had this swing high coming in at 128.47. We then had a number of subsequent highs and lows that found its way in between the 128.00 and 128.47. I know it's 50 pips, around 50 pips, but on the daily chart, it did a pretty decent job of finding resistance sellers within that area. Yes, we did have a break to the upside right here that failed. That was the extreme up to the 128.80, 90ish, 93ish type level. I think it comes in. And in trading earlier this in the month of June, I guess, and actually the end of May, the price came up toward this swing into the swing area and found willing sellers. So we're breaking above the high of that swing area at 128.50 or 48. If we're able to stay above that level, and we are breaking, then the bias remains obviously more to the upside here for the sterling versus US dollar. So the dollar selling is the way to go in trading here today. We are again seeing US stocks higher. We're seeing yields lower. We have the FOMC rate decision ahead, which may keep things under wraps for the time being, but dollar selling is the key today. My name is Greg Michalowski. Good fortune to trading. Bye-bye now.